Okay. Um, I just want to make sure this is working. Hang on. Looks like it is. Okay. Okay. So I'm gonna make this really fast. I don't want to keep doing multiple times of this a day. But again, we're just this won't keep happening. I'm just getting the procedure down. So now that the market's open, let's see. Actually, relative to Friday, actually the market's up. So since the market's up, and this is when it goes up, you lose money at least for a minute. For the beginning, that's why we're at break even, because the theta over the weekend and the market run up basically have balanced out. So I am looking at getting in at I was playing around here, but now that when this happens, you get the chance to reassess when you want to get in. So my plan is to 31.20. If I got in as high as 31.20, that there's still a decent chance I won't hit that, which is nice. And then if it stayed under 31.50 and then backed up, I would just get out and with my $50 loss, and you can say I have plenty of money up here. So my initial idea was 31.20, and then if it continues, you go to 31. You go past 31.50, you get in at 31.50 as well. That's and then you can see you'd be doing fine. So but honestly, I could probably push that a little bit farther. And I might do that depending. Like but I'm going to leave it at 31.20 now. I'm going to get in at 31.20. So because this is real, this is not the other trades are paper, but this is the one trade that I'm doing that's real. So I actually got to put this on because I don't want to have to watch it. I mean, I can put an alert in. 31.20 so far away. If it hits it, I can just put it on, and I could fall asleep at the switch. I could, whatever. So it's a good idea to put it on, right? So let me put it on really fast, and you want to know how to do this anyway. So, okay. So, and the account that I'm going to do it in, it's this account. I got no positions in this account. So, here I go. Let's see, trade. $31.20. Okay, so it's the active one. I want to buy. Ooh, delete all these. What the hell is that? Try it again. Okay, buy. Okay, so you set it to first triggers all, and then you put this on market, put this on good till cancel, and it won't do that because it'll fill right now. So the only way you can have a market that's good till cancel is if you have another condition. So the condition is, when you click in here, it's the symbol. You could put any symbol that you want in there, but it's the symbol that of the thing that you're in, unless you change it. So you say, I want the bid to be greater than or equal to 31.20. That's it. So now you say, and right now you can see it's 30.78. So it's not 31.20. So it's not going to fill right now. So nothing's going to happen. So when you put first triggers all, nothing's going to happen until this one is filled. So now, create opposite order. And the second order is only going to even attempt to fill once this first order fills. So now what's the second order? Second order is I'm going to sell. And all I want to do is change it to 31.10. So ask 31.10, and that's it. Save, and you see when I go over here to monitor tab, you can see I'm gonna click on one, and one's gonna say waiting condition, and one's gonna say waiting trigger. So you hit confirm, send. Right? Okay, so that is it. So. And, you want to do it like this because, if the market were to go up really flash up and then flash down in some crazy flash crash, you'll be out. You'll lose $50 or whatever, but you'll be out and the market's falling. So you always want to end it that if both fill, you're not in anything, because you don't want to be in a position and the market's crashing. So I don't want to, you know what I mean. So better to risk going into drawdown because the market's rising than to risk losing something when the market's crashing. So it's probably not going to ever happen, or it might happen once in a blue moon, but whatever. It's just not very risky, and the MES is pretty small, so it's not like the move you lose very much anyway. So okay, so that's that. That's how you do it. So that's what I did for this trade. So now this one I was just playing on the bottom. I'm just considering prices. Again, these two are in. This is nothing. These aren't checked. I didn't get in yet. I'm just waiting to see. So now I did say I'm going to take this off, and these are just theoretical. So I did. So these two positions right here are exactly what I got in Tradier. I just put them up here so I can see what I'm doing, and I put them together. But I got them in Tradier instead because you don't have to pay the commission. If I could trade them in Thinkorswim if I wanted to and pay the commission. So right now, nothing's happening. This is accurate. So if I hit this, it'll be like that, and it won't be this much in drawdown because it'll be way up here. It'll be that. It'll be like 100. If it happens today, I'll be like $120 in loss or so. Not 225. I'll be like $120 in loss or so if it goes up to 31.50 today. And by tomorrow it would be $50 or so, because $75 less, like that. Okay, and in drawdown before you win. So this is all good here. The bullish one. Okay, same plan. You can see because it's farther back, even though it ran up against it, still it's $23 in profit because it's not as sensitive to a move up. So I have here on Friday, I set it at 31.40 and 31.70. Same idea. So look, at 31.40, I put this on, and as long as it stays below 31.70, if it comes back, I get knocked out and I get whipsawed, I'll lose $50. I still have plenty of money. If it continues to go up, it's 31.70, and you can see it's more than I need. It's too aggressive. I don't need it to be this aggressive. So I should adjust this. So I'm going to look to do this move them both up by. I keep them 30 apart. I don't have to. So when you're picking these, it doesn't really matter that much. You're just, you basically want to be in one or two, depending on how early you got in. By the time you get to here, it's very predictable how much money you make, and so you got to pick where you just pick where you get in, and if you get whipsawed, you get knocked out, and every time you whipsaw, it's $50, and you try, and it's like whipsawing versus how much money, if you get whipsawed a bunch of times and if you whipsawed 4 times and it fell, then you would lose a few dollars. If you got whipsawed and then ended up here, you'd still make $200, and like that. So and over here, if you get whipsawed a bunch of times and then you're over here, like, look, you can whipsaw like 8 times or something, even though this is going to come down a bit because of the volatility. So if this came down from 400 to 350 or 300 or 250, that means you can only whipsaw 5 times. So, but it still seems like a lot. So I might, and if you don't have to do it at all, you're better off. But again, I look at this, and where I start to place, when this starts to get too close, like this is, you at least got to get in before that. So when I said 31.40 is too close, that's probably true. I could probably go up a little bit more, but maybe 31.50, 31.60 is probably as far as I would put it right now, as of today. So, and it might change tomorrow. It's easy to do. You just let me do it. So 31.60 is, if I get in 31.60 there, and then here 31.90, maybe it's too far. We'll see. look, it's still pretty good. So I'm going to do 3160 and 3190 as my triggers to get in the bullish version. I'm not going to put orders on or anything because this is just paper trading. So, I'll know, if an alert goes off or if it crosses over, I'll just mark it. But it's exactly the same. So again, this is paper trading, doing well, looking like it's going to win. We'll have to see. I think we're going to be winning almost every week on these trades, unless you have the really odd whipsawing a million times. And even then, if it's really whippy, I would just look to get out of break even or a very small win and let that week go by. So we'll see. So that's that. Bearish one we've already been over, but now that the market's open, I am in the 30-40, and I explained why I got in at 30-40 because when the market goes down, you got a lot of credit to burn off, so you want to get in as low as you can, and you take a couple of whipsaws. So what? On the way up to make sure that you're in. Now I like this because I'm quite far from the 30 where I would get knocked out, so it's not likely that I'm going to get knocked out. I mean, I could, but it's not likely I'm going to get knocked out. And so if it runs up, I'm going to make money. And it's not likely I'm going to go down. So it looks like I'm just here, and I'm not going to get out today like I was thinking because the market's moving up more, and because it's moving up more, there's some there's some loss anyway. It's fine, but it looks good. But maybe by tomorrow we'll see. I could get out right now, and I could get out right now $150 in profit, which is pretty damn good. It's like it's already it's one day. It's not even a day. I got in Friday at close. It's a quarter of a trading day, and I'm up 5%. So maybe you should get out. Maybe we would get out when we're trading bigger sums, especially other people's money. I mean, 5% in a quarter of a day, get out, and that was a good week. We would have like a table that we would use to guide us, but that we can make. But right now, working out the kinks. So here's this, looking good. I can't see why I would get out now. Go back to 30-30. I get knocked out at $85. I still be $85 in profit, and then it would look like this. So it would look like this down, and you'd be back to here, and would look like this, and you wouldn't, you'd be farther away from this, and hoping not to, $611 in potential profit, yada yada yada. So, but I'm not gonna do that now. We're just waiting. Okay, just showing you. Okay, and then the iron. Oh, look at this. I'm gonna get out. That's it. I mean, I'm not just. I don't think I'm gonna fool around with this anymore today. So I'm at 30.84, even though it hasn't moved, and I said I wouldn't. Well, let's see. I'll stay in. All right, but you can see how it's doing well. $400. So, but right now, if it does hit that or does hit that, probably would get out. I have to see. But no alerts have gone off. I'm just sitting here. But that's good news, right? Look how well that's doing. That's because this is got in on Thursday at 11 a.m. So we've had the theta for that many days. Plus, I made $100 doing this on the protection. So this was a good trade. So, but I'm not gonna. What I'm trying to say is the one thing I do know that I'm not gonna do in this trade at this point, and I'm not gonna let it run to either end. It's like to try to win. It's like I'm not like if I can stay in the middle and the thing will keep creeping up, great. If it starts to run, I'm gonna get out. So that's right now. I'm thinking here. When it hits this, I'm not gonna necessarily get out. I'm gonna look at it and see how much time has passed. Because if a lot of time has passed, it could be at 500, 600, and then I'll say, oh, you know what? I'll put two more things and I'll give it a little bit more to hope it goes back or whatever. But again, right now it says 391. Click on these things. This gives you a realistic of what it would be to get out. Click on this. You can see it's 338. So you're giving up. Now it's 351. So you're giving up just about $50, which makes sense. And if I do want to get out, I probably would do that if I think I want to get out, it's looking good by the end of the day, probably would get out instead of having to wait overnight. The spreads aren't as good, and the move. I mean, you could get out at night, but the move is like if it gets close to the one side at night, and then it'd be hard to get out. You have to wait till the morning, and then you'd be back in this position where, I mean, the strategy would still work, but you gave up an easy win. So probably won't do that either. So anyway, this is good. I'm there. Okay. And finally, the ES version. All right. So this is a new one. Never done this. So I'm 240 loss. Now that is not as much on this kind of trade because the potential is a lot on this trade. And look, I'm nowhere near anything dangerous. But the reason that I'm in that much loss is because the slip, the number of longs on this is very susceptible to volatility. This trade is pretty susceptible to volatility, but that's why the thing's so high. And this is why I'm trading this in simulation, because maybe this trade is just too expensive to do or too risky or something. I don't think it is, but I just had the idea of doing this whole thing in simulation. So which is what I'm doing. So we'll see how it plays out. So this one remains to be seen, but looks fine so far. Okay, so that is it.